Hey, it's Clay Trade, and this will be a video chart on SPNG, Sponge Stack Delivery Systems Incorporated. Uh, like I've said in all my videos, I try to do this one at least once a week, as it remains to be a very popular stock. And then had a request for the weekly chart, which I thought, hey, that's actually a pretty good idea. The daily chart's really not doing too much; it's in such a narrow range now. But with the weekly chart, we can kind of cater to the longer term holders, and then just give an idea of what kind of the overall longer term context of the chart pattern is, and obviously the things you do and don't want to see from a charting perspective. So with that, let's just jump in. The main thing and the first thing that I kind of want to point out is this white line there, and this is the 50-week simple moving average. So remember that's 50 weeks worth of average prices, and you can see that it was basically going sideways and started to drop here, but in June and then to July it started to rise. So I haven't pulled back too far. I believe this is a 1 year chart or 10 months, but I don't know the last time that the 50-week moving average was actually sloping up. So that right there is a good sign that the overall trend is now bullish, and that can be seen by taking the past 50 weeks worth of price data and then averaging those out. So with that increasing, that is a good thing. So not that people didn't already know it by looking just at this price action, but for secondary confirmation, it's very clear that the overall context of the trend is up, once again given by looking at the 50-week simple moving average. Now, in the shorter term, and keep in mind when I say shorter term, we're looking at the weekly chart. So some people might call this a longer term pattern, but within the context of this video, which is once again the weekly chart, we're going to call this short term. But in the short term pattern on the weekly chart, we have a nice little bullish pattern shaping up. Let me make this a little bit thicker here. So that is what we're going to call our flagpole. And then we have, and I'm going to make that a little skinnier. Let me grab our support point. But we have something like this, and if you wanted to, you could actually, and what I'm going to do is draw this up here. Makes a little bit more sense. You can see more lows. But we have a bull pennant shaping up here. We had a big move here on big volume, and that's what you want to see in the flagpole portion of these patterns. And then as the consolidation has happened, we have had less volume than what was on the flagpole portion of the pattern. So what this is showing is a nice breakout, and then it's just been simply consolidation. And why is this a bull pennant when the price has been going sideways the past couple months? Simply right where I started off. This pattern is occurring within a chart where you have an increasing 50-week simple moving average. Therefore, it's a bullish pattern because it's occurring within a bullish context. So, that's simply why you can call a chart that's been going sideways for the past 2 months bullish. It's just all about what the overall context is. So what we obviously want to see is a break above our downtrend line here, and on any sort of break, the more volume you have, the better. So hopefully on a break, if you can get a volume bar that looks something like that, that would be just great. Even if it better, something like that. But the point is, getting above this line is the ideal area. With a break above that line, we are looking at the next resistance being right up here at 18 cents. And then after that, the infamous 28-cent mark up there. That's obviously getting a little far ahead of ourselves, but this is the weekly pattern, so longer time frames should be used with this. In terms of support, if this line fails, this support line, our next key support is down here at, and let me change that to green since that's a support, but right here at 0.056. And then if that one can't hold, it really needs to hold the 50-week simple moving average. But for the time being, we're consolidating nicely within our bull pennant pattern. Just a quick glance down here at the indicators. Not really liking how we got rejected here by 50. Wish we would have gotten above that. That would have been better. And then also these MACD bars are shrinking. We need to feed those. They're Wheaties, so they start to grow again. That's what we want to see. See them go big and strong. That will be the idea there. And then the one thing that's good to see though is money flow on the weekly is still sloping upwards. And when you see money flow sloping upwards within a sideways pattern, that's just a nice little kind of warm and fuzzy feeling to know that money flow is still coming in a positive sense despite the price action just going sideways. So that wraps up the weekly. Just remember, overall context is bullish. We are in a bullish pattern, so hopefully within the next couple of months, can push up through this resistance trend line and give this 28.5 cent area a test. On another note, I'd encourage you to check out bullmarketnewsletter.net or look down into the post at the free ebook. If you click on that and then sign up for the newsletter, you will be sent a free ebook that's got a bunch of good stuff in it, and it's been getting good reviews. And then also you will be subscribed to get bullish chart setups, bullish fundamental companies, articles that aren't made public. They're just on that list, and it is all free, no strings attached, so it's worth checking out. So head over to the site, sign up for the newsletter, and see what it's all about. Once again, this was SPNG weekly chart. Let's see what these next few weeks bring, and hopefully the bulls can get back moving upwards again here. Enjoy your weekend.